Good morning, ladies and gentlemen, and welcome to the show this Tuesday, the 21st of December, 2021. Thank you for tuning in. I'm glad to have you guys here. Now, let's get started. Let's open up the charts right here and take a look at what's going on. See, the silver price went up this morning. It's still up 30 cents, but it's starting to descend back down again. This is typical with gold and silver that are being suppressed by these four big institutions that are manipulating the price of gold and silver to the downside, and they've been doing this for a very long time. You see where it's going down right now? It's the New York is open, the COMEX, and they're bringing it back down again, shorten it. Okay, let's take a look now. Well, the thing is we're in a curious little period right now. An awful lot of people are saying, hey, should I buy into this market? I was listening to some of the talking heads last night. I heard one of them say, hey, you know what? He said, the reason why you should all buy into this market right now is this market is only 3% off of its all-time high. And that was his reason why you should buy. You should buy because it's only 3% off of its all-time high. Okay, if I walked into a car dealership, say I went into a Cadillac dealership, and in the middle of the showroom floor they had this Cadillac there. It was all decked out and painted with gold paint. And there's another one sitting in this showroom too. And the salesman walked over to me and I said, what's up with this car? It's got a sold sign in the window. He says, yeah, we just sold it yesterday. He said it's the most expensive Cadillac ever sold in history. And I said, well, this one right next to it looks almost the same paint job and everything else. It's for sale too. He says, yes, it's for sale, he says. He says, it's for sale. It's only 3% cheaper than the most expensive Cadillac ever sold in history. Do you want to buy it? No. He's got gold paint. You can... You can splash makeup on a pig, but I mean, this is the market right now. It's the most overpriced market in history. And his reason why saying that you should buy into this market is because it's within 3% of the highest market valuations in history. Yeah, right. This is the greater fool theory. You're always going to find a fool that's going to pay you more than you paid. And this is the way an awful lot of the markets have been running lately. And of course, well, they feel all safe because they got Fed put behind the market. Well, guess what? Now, Fed put's gone, guys. And it ain't coming back until the market crashes. And it's going to have to crash pretty big before the Fed will bring a put back again. And they'll only bring it back because they're frightened of what they've caused. This is where we're going with this business. Anyway, looking at silver today, it's kind of depressing to see it go up some. Oh, happy days. Silver's going up. It's up to 22.75. And then all of a sudden, back down to 22.54, and they're knocking her back down again. Right back to their old business again, Take a look at gold, same thing. 17.91 right now. It's up 40 cents is all. So they've taken all the gains out of gold so far, and silver too, this morning, the COMEX traders. Let's take a look now at cryptocurrencies. 2251, that's in billions, and we're going to refresh the page and see what it is. Well, it hasn't moved a bit. It's still 2251, so it's stalled right now. It's not moving. Yeah, Bitcoin at $48,678.23. And it's very stable in price right at this particular moment. We're going to take a look at the Dow Jones today. It's up 301 points. Let me refresh the page. 315. Now, it's probably going to stay about that all day. It might go down to the 200s. It might go up in the 350s and stuff, but I think it's going to settle in around 300 points up. This is exactly what I expected. We got buy the dip buyers out there, But you notice, I don't think it's going to make up. Like, what we have been happening is you get a dip and then it all makes up all the gains again and more. Market's been setting all new time highs. Till we get this Fed put back again, I think this is basically over. And the Fed's tightening schedule, some market analysts believe that it has been priced in. I don't think it's been priced in yet. I think that the market is in denial. I don't think anything's been priced in yet. I think in January it's going to be priced in as things really start to happen. I mean, they just can't believe. They can't believe that the Fed's actually going to withdraw support from these markets and actually start raising interest rates and go through a tightening cycle right now. They just, like, they're a little bit of disbelief out there. And they want the party to continue. They want to believe that the punch bowl's still here. The punch bowl's been pulled away. And maybe they're so drunk off of the punch that they don't realize it until they're going to wake up suddenly and say, hey, where's the punch bowl? So anyway, that's what's going on. Let's take a look now at crude oil, 70.49. It's up $1.88 on the day so far. Notice that crude oil responds with the markets too, but you know, I'll tell you what. We've got the multiplier out there going on behind the scenes. The big multiplier. Every 3 days, we got exponential growth in a situation that's happening in the world that's going to very soon probably peak, because you just can't keep doubling something every 3 days and not have it peak. Have a peak. During that peak is probably going to be coordinated and timed exactly with the markets falling. This whole thing's going to be over pretty soon, probably, and we're going to have a more accommodative Fed. I think probably, probably sometime in January. It's going to all happen that fast, and I think we're going to have an accommodative Fed once again. Really, I think that's what's going to happen. Let's take a look at the MOVE index today, 7202. Of course, you know when the Fed goes back to being accommodative again, it's all over. The inflation's won at that point in time. Well, we all know which way this game's going ultimately in the end. Inflation's going to win regardless, because they have to support the people of Earth now at this point. They've basically removed an awful lot of what people used to use as their way of, people have, okay, take a look at an average person out there, an average Joe. They used to have a way, say they had, the way for them was maybe they had a small job working for a small business someplace. Maybe it was making t-shirts on some sort of silk screens or something. They'd go to work every day and make these t-shirts or whatever, you know, and stuff, and then they go home and they're satisfied to get their pay every week and everything. Well, a lot of these small businesses and stuff, now they're gone, they're wiped out. And with these people have been relying upon government support checks and stuff, and unemployment, whatever. So you got the government coming along now, and they're not going to be accommodative anymore. Well, to the masses of people out there, after a little while, there's going to be a tremendous wave of discontent is going to come, unless they go back to being supportive again. It's as simple as that. They're going to have to continue to be supportive. And continuing to be supportive in a society that's built mostly on just consumerism. Well, the opposite side of consumerism is you have to have somebody out there that's producing everything, supporting you. You know? I could rattle on about this a little bit, but say that it was like Survivor. Say we were all living on an island someplace, you know, and say there's 100 people living on the island, and say there was one old sick fella, you know, had a cane and everything else. He's old, so everybody else, the 99 other people, took care of him, you know. But say then there's a second fella couldn't work anymore. Maybe something happened to him. Well, this is putting a burden on the other 98 people to have to take care of them. Okay? And say all of a sudden, a whole bunch more, 10 more people suddenly found that they couldn't work anymore. Well, now you only got 90 people still working, but you can function. So the 90 people are out there taking care of the 10 people who just can't work anymore. Well, say something come along. I don't know what it would be. Maybe they got plantar's warts on their feet and they couldn't walk on their feet because it's too sore or whatever. Something, anything come along. And say half of those people, now 50 people, couldn't work anymore. And the other 50 people out there had to support those people. Now those people, the 50% that can't work, have become consumers. They're consuming, and the other 50% of the people out there are doing all the work. They're all collecting the firewood, cooking the food, going out hunter-gathering and whatever, and they're supporting the other 50. When that equation starts to get to a certain point where there's so few workers out there and so many consumers, all the other people who can't work, it starts to get to a point where it doesn't function anymore. And that's where our society is right now. There's less and less workers out there, more and more consumers, and they're consuming with these digital monetary units. Ultimately, what this leads to in the end, it leads to the digital monetary units losing value. Because there's not enough workers out there, there's more consumers. Too many consumers, not enough workers in society. I kind of rattled on about that a little bit, but that's overall, that's the big problem in the world is everybody's becoming a consumer. And how are they purchasing things and buying things is, well, they're being given the money. Just giving it to them. More than if they worked. You can't run a world that way for very long. That's what's called unsustainable. And that's where the situation that we're in right now, we're in an unsustainable environment. Well, we got robots coming. Let them do all the work. I don't know. Anyway, it just ain't gonna function properly. It's gone hooey. Let's take a look now at bonds and rates. Bonds and rates today. We see jumping yields today. And this is substantial. Now we have to see if we get multiple days like this, but we're looking at over 6 basis points. Almost 7 basis points on the 30-year. We're looking at a 30-year at 1.91, and we're looking at a 10-year at 1.48. With some substantial rises in yields today. Now let's take a look at the US dollar index at 96.60, and it's going up. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.